It is the official first week back to school, at least here in California. Welcome back, students. And that's the perfect segue right now, because earlier this week, I got asked the question, Dietrich, can I buy a house if I have student loans? And I can't say yes, I can't say no, so I'm going to say maybe. It really depends on what your situation is. For most Americans who have student loan debt, they are burdened more by that than they are by credit card loans and automobile loans. So student loans is a very prevailing issue that's affecting many people right now, especially those who want to go purchase a home. How does student loans affect all of this? Well, it's going to count in two places in terms of your credit report. It's going to count in terms of your payment history, and it's going to affect your debt to income ratio, right? So for those who have small balances, maybe no harm, no foul. But if you're like me, who went to school and attended someplace like Pepperdine University in Malibu, California, very pricey school. And I, like many of you, had to fund my education through student loans. So I am feeling your pain. I am paying back those student loans as well. So again, your credit history is affected because it's going to talk about your payment history and then your debt to income ratio. These are all pieces that go into your application for a mortgage. There are some ways to kind of work around this, but let's talk about what's happening right now. So if you've been paying attention, and I know you have, you've seen that student loan payments for federally backed loans have been placed into forbearance or deferment, which means that for a limited time, you are not making any payments on your student loans. Add to that, they are not charging you interest on the student loans. So what's happening is, because of that, those are showing up on your credit report as a zero balance. Now, when a lender sees that, it's kind of a red flag, because they don't know how much you actually pay each month for those student loans. So what they'll do in the case of FHA loans, they'll take 1% of the balance. For Freddie Mac loans, they take 0.5% of the balance. So let's just say you have $100,000 in debt and you're applying for an FHA loan. They're going to take $1,000 and apply it to your monthly debt. Now, if you have any other types of debt, revolving debt, auto loans, all that kind of stuff, that's going to negatively impact your credit. So those things can disqualify you from becoming a homeowner. Now, I talked to one of my mortgage partners today, and he said there are some ways around that. If you're conventional, you got a little bit more leeway. Also, if you are not in default or you haven't missed payments, you're in a much better position. If you've missed payments or in default, there's not much they can do for you right now. You're gonna have to work on rebuilding your credit and try again. So I don't want to discourage you, but you at least need to know what you're going to be dealing with if that's your situation. But if that's not you, what you can do is call your loan servicer and tell them that you want to be taken off forbearance or deferment. You want to be completely removed from that. Now, if you can't make the payments, that's something that you might not want to do, or you might want to apply for an income-based repayment plan. But if you're able to afford the payments anyway, have them take you off. Here's the reason. Going back to the lender, looking at that zero balance on your credit report, if they see that, they're going to take 1%. However, if you're off and your payments are, let's say, $250, $300 a month, we're comparing $300 a month in debt to $1,000 a month in debt. Huge difference. And again, could be the thing that gets you the mortgage or keeps you from being able to qualify for a mortgage. So you want to keep those things in mind. Now, I'm not saying this to push you either way to get off of forbearance or deferment or stay on it. You at least need to know what you're dealing with if you're in a position where you want to go purchase a house. There are some things that you need to do. And the first thing I'm going to tell you is you need to go talk to a lender. This is not my wheelhouse. I am a real estate professional, but I don't do loans. I know some things about loans, but you need to speak to a professional who's going to know the ins and outs of that process. The second thing you need to do is sit down and take an honest look at where you are financially. Can you afford a home? Can you afford the upkeep that comes with the home? Can you afford not only the down payment, but the closing costs, which average to about 2 to 3% of the purchase price? So you need to sit down with your lender and your real estate professional and figure out the strategy that will help get you into that house. So I hope this helps somebody that's out there. Please make sure that if you love this content, subscribe to the channel, ring that bell so that you're notified when I drop future editions of Info on the Go. And if you have student loans out there and you're thinking about purchasing a home or you're in the process of it, please leave me comments. I'd love to hear what it is that you have to say, because I may be able to use some of that to speak to some of my future clients or just kind of guide some other people through the process. Again, I'm Dietric Williams. I thank you for watching this edition of Info on the Go, and I'll see you next time. Thank you for watching this edition of Info on the... What's up, buddy? Well, okay, so yeah, Daddy was making a video, and can you say hi to everybody?
Hi.
All right, I'll see you later, buddy.
Okay.
All right.
Hey, what are those lights for?
Work from home, back to school. You gotta love it.